China's digital yuan is no longer a theoretical experiment. It is real, active, and systematically reshaping global finance. While the world obsesses over stock tickers and interest rates, Beijing is quietly building the infrastructure to challenge the US dollar's dominance. Most people won't notice, but the elite central banks, global institutions, and hedge funds are already acting. This isn't speculation. This is observable behavior unfolding in real time. But it follows a pattern so precise that every major currency transition in history has done the exact same thing. Look at the US dollar. For decades, it has been the world's reserve currency, the backbone of international trade, and the foundation of global finance. Every transaction, every reserve holding, every trade is denominated in dollars. Meanwhile, China has been implementing the digital yuan pilot programs in cities. Cross-border trials, integration into payments, and bilateral currency swap agreements with over 40 nations, totaling trillions of dollars in capacity. You might think this is incremental progress, just normal development. But here's the truth. This is the deliberate building of an alternative system. A parallel financial network designed to reduce global reliance on the dollar. When we look at history, the mechanism becomes clear. Every time a global reserve currency has declined, this followed the exact same four-stage pattern: setup, debasement, crisis of confidence, and collapse. This isn't a theory. Britain, the US under Nixon, Germany in the 1920s, all followed this sequence with mechanical precision. Now, the digital yuan is the variable that could accelerate the next transition. Stage 1, the setup's complete. China has identified weaknesses in the dollar system: record US debt, its multi-trillion-dollar deficits, and over $8 trillion in foreign-held treasuries as of late 2024. The foundation is there. Stage 2, the printing or debasement, is also in motion. The Federal Reserve has expanded the money supply for decades. Key programs: yield curve control, forward guidance, all methods to sustain the dollar's dominance even as obligations mount. Stage 3, the crisis of confidence, is where we find ourselves now. China has been gradually reducing its treasury holdings, hundreds of billions trimmed each year. More importantly, it has built alternative systems: CIPS, cross-border interbank networks, currency swaps, gold accumulation. Lead institutions are watching, reallocating reserves, and hedging against the dollar. Meanwhile, most investors and the general public remain blind to the scale of these moves. Once Stage 3 begins, history is unambiguous. The old currency cannot regain its previous global standing. The math doesn't allow it. Stage 4, the inevitable transition is coming. Will it happen slowly, like Britain's 30-year sterling decline, or fast, like Germany in the 1920s? That is the only uncertainty. The digital yuan, along with the infrastructure China has created, ensures that when confidence in the dollar erodes further, the world has an alternative ready. Every swap agreement, every interbank connection, every trade in digital yuan accelerates this process. The question is no longer if the dollar's primacy will be challenged, but how fast the transition occurs. For investors, governments, and the informed minority, the lesson is clear. Diversify away from over-reliance on dollars. Understand the difference between currency, which is backed by promises, and money, which is backed by real value and scarcity. Gold, silver, and trade surplus currencies are all increasingly favored by central banks around the world for precisely this reason. The digital yuan is not a conspiracy, it's history repeating itself with modern tools. The elite are already acting. The public is still asleep. The pattern is real. The stages cannot be skipped. The outcome is determined by math, not hope. China didn't create the crisis. It simply recognized it. Stage 1 and 2 baked into the system long ago. Stage 3 unfolding as we speak. In Stage 4, the shift cannot be stopped. Every country, every investor, every institution that relies solely on the dollar will face the consequences.